Thinking about buying land? Before you fall in love with the perfect piece of dirt, here's how land loans actually work. Explained simply, maybe you've found a quiet spot with a great view, or a patch of woods that feels just right. It's easy to get excited about the possibilities. You can picture your future home sitting right there. But before you start sketching out floor plans and picking out paint colors, we need to talk about the money part. Getting a loan for land isn't like getting a mortgage for a house. The banks, the credit unions, other lenders. It's a whole other ballgame with its own set of rules. It's crucial to understand these rules from the very beginning. If you don't, you could waste a lot of time and even money. You might get your hopes up only to find out that the loan you thought you could get just isn't possible. Lenders have very specific reasons for being so careful with land loans, and we're going to break all of them down. This isn't to scare you away from your dream. It's to make sure you walk into the process with your eyes wide open. Knowing what to expect is your biggest advantage. It helps you plan better, save smarter, and ultimately get that piece of land you really want. My goal here is to give you the inside scoop. I want to explain this in a way that actually makes sense, without all the confusing bank jargon. We'll talk about why lenders ask for so much money up front. We'll cover why the interest rates are higher, and we'll go over exactly what you need to have ready before you even talk to a loan officer. By the end, you'll know whether a land loan is the right move for you and how to prepare for it if it is. Let's get into it. So, let's start with the basics. A lot of first-time buyers are surprised by how different the process is. They find a great piece of property, call up a mortgage broker, and expect a smooth ride. But the broker starts asking questions they weren't prepared for. Questions about zoning septic systems, road access utility hookups. Suddenly, that simple dream of buying dirt gets a lot more complicated. We're going to demystify all of that. We'll go through it step by step, so you can be the most prepared person in the room when you finally decide to make your move on that perfect plot. Okay, so what is a land loan? At its core, it's pretty simple. A land loan is just money you borrow specifically to buy a plot of land that doesn't have a house on it. You use the land itself as collateral for the loan. That means if you stop making payments, the lender can take the land to get their money back. This might sound a lot like a regular home mortgage, but there's one massive difference that changes everything. With a home mortgage, the collateral isn't just the land, it's the land plus a whole house sitting on top of it. And that house is a huge deal to a lender. A house provides a ton of security for the bank. It's a structure that has a clear and relatively stable market value. People are always looking to buy houses. If a borrower defaults on a home loan, the lender can foreclose, take possession of the house, and usually sell it pretty quickly to recoup their losses. A house is a finished, usable product. It has a roof, walls, plumbing, and electricity. It's something that someone can move into and live in right away. This makes it a much safer bet for the lender, because there's a large pool of potential buyers ready to snap it up. Land, on the other hand, is just potential. It's an empty canvas. Because there's no house, the collateral is just the dirt itself. This makes lenders nervous. They see it as a riskier investment for them. If they have to take back the land, it can be much harder to sell. The market for raw land is a lot smaller than the market for houses. It might take them months or even years to find a buyer who wants that specific piece of land for their specific project. This fundamental difference, the lack of a house, is why the entire process for getting a land loan is stricter, more expensive, and more complicated. This is the key concept you have to grasp. When you apply for a home loan, you're asking to borrow against a valuable, easy-to-sell asset. When you apply for a land loan, you're asking to borrow against an asset that is seen as less valuable and much harder to sell. That's why the lender is going to scrutinize your application much more closely and ask for more from you to balance out their increased risk. Now, let's talk about the land itself, because the type of land you want to buy has a huge impact on your loan. Lenders break land down into 3 main categories, and each one comes with a different level of risk. Raw land. Untouched, undeveloped nature. No roads, no power lines, no water pipes, no sewer system. Possibly completely landlocked. 2. No legal right-of-way. Just a chunk of the earth, wild and free. Getting a loan for raw land is the hardest of all. Unimproved land. Some basic amenities, but not ready for a house. Located on a public road, clear access. Utilities nearby, power line along the street. Those utilities haven't been connected to the property itself. You'd pay to run a power line to your building site. Drill a well for water. Install a septic system for waste. Unimproved land is less risky than raw land, but it's still a project. Improved land. The gold standard for lenders. This type of land is ready to go. Paved road access. Water to the property line. Electricity to the property line. Sewer to the property line. Often in a planned subdivision where zoning is already approved for residential construction. From a lender's perspective, this is the safest bet. The path to building a house is clear and straightforward. The land is much more likely to increase in value quickly. Getting a loan for improved land is significantly easier. So why does this matter so much? Because the more improved the land is, the less risk the lender takes on. Improved land is easier to value. Improved land is easier to sell if things go wrong. A developer or a home buyer can look at an improved lot and know exactly what they can do with it. Raw land, however, is full of question marks. Will you be able to get a permit for a septic system? How much will it cost to run electricity half a mile through the woods? These uncertainties make lenders very cautious. As a result, the loan terms you're offered will directly reflect the type of land you're buying. When you buy a house, you might hear about loans with down payments as low as 3%, 5%. With a land loan, you can pretty much forget about that. Lenders are typically going to ask for a much larger down payment. We're talking in the range of 20% up to 50%. If you want to buy a piece of land for $100,000, you might need to come up with anywhere from $20,000 up to $50,000 in cash, right out of your own pocket. Why on earth is the down payment so high? It all comes back to that same word, risk. No house means no backup plan for the lender. So your down payment becomes their security blanket. Lenders see a large down payment as your skin in the game. If you've invested a huge chunk of your own money into the property, you are far less likely to just walk away from it if times get tough. People will fight much harder to keep from losing a $50,000 investment than they will for a $3,000 one. It's a psychological and financial commitment that shows the lender you are a serious and stable borrower. The down payment acts as a safety cushion for the lender. This safety cushion is critical because land is harder to sell than a house. If you default and the lender has to foreclose, they know they probably won't be able to sell the land for its full appraised value right away. They might have to discount it to attract a buyer. Your large down payment covers that potential loss. For example, if you put 40% down on that $100,000 piece of land, you're only borrowing $60,000. This means the lender could sell the land for as little as $60,000 and still get all their money back. Your down payment is their insurance policy. The exact amount you'll need to put down depends on several factors. The type of land is the biggest one. For a pristine, ready-to-build improved lot, you might get away with a 20% down payment. For a remote piece of raw land with no road access, the lender might demand 50% or even refuse to lend on it at all. Your financial situation also plays a role. A borrower with a high credit score and a low debt-to-income ratio might get a better deal. The location and zoning of the land matter too. Land that's zoned for commercial use might have different requirements than land zoned for a single-family home. On top of the massive down payment, you should also expect to pay a higher interest rate on a land loan. If the current rate for a 30-year fixed home mortgage is, say, 6%, the rate for a land loan might be closer to 8, 9, or even higher.